Good morning, friends. Welcome to Konexio Technical Insight. I am Rahul Randeria, and I will be conducting today's show. Today, we would be discussing regarding the trend, the setup, the technical indicators, and candlestick patterns in Nifty, Bank Nifty, as well as the Nifty test classes. Now, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the markets were into oversold territory. It has taken support around that slightly tilted downward sloping channel. It has taken a support, but looking at the global patterns and the technical indicators being oversold markets, we were expecting a bounce back after further cool off. So market behaved exactly in the similar manner which we have been expecting. Market opened with a gap down, and from there we have seen a sharp rally, and Nifty rally towards the level of 16,700 odd marks. And from there, if you see the daily and weekly charts, the Nifty had ended on a positive note. Now let us come to the technical charts and try to identify or figure out what we observed on the daily charts of Nifty, and then we'll see or try to figure out what we are expecting in the next week. Now this is the daily chart. Now let me draw a parallel channel. Now this is the parallel channel which Nifty has been hovering. Now last week it was around these levels. This was around these levels. We are expecting buy on dips. It ended it at this support line, and then we have seen a sharp rally towards the upward resistance line. RSI is also into a positive territory. Now looking at this pattern, we feel that the trend is slightly getting stronger day by day. But in last 4 to 5 trading sessions, such kind of sharp rally can bring in pullback. I mean to say some sort of profit booking in the next week. And from after that profit booking, again we might see buying coming in at the lower levels. Now one more important thing which I would like to highlight for the next week is on 15th of March, that is Fed meeting, the US Federal Bank's meeting, where they might consider rising of interest rate, and that might again give some sort of triggers for the market. But looking at the candlestick pattern, we feel that market is poised for an upside rally from these levels. Now looking at to the past trend, you see this rally, it corrected from these highs from 18,600. It again came back to 16,400. From there again it rallied back to 18,300 to 400 mark. Again it corrected towards the level of 15,700, and from there again it has entered into a positive zone. RSI is also positive. So now we feel that again for the third time or for the second time, we feel that again Nifty is well poised to test the levels of 18,000 to 18,300 mark. So this is the area where we are expecting market or Nifty to again retest those levels, maybe in next 90 days. So any pullback from these levels. So currently Nifty is quoting around 16,630. Say for example, if we see some sort of correction around 16,500 to 16,400, that should be used as a buying opportunity, and we are expecting a breakout of this falling channel. So again the trend remains to be positive. Yes, the global geopolitics is dominating the trend, but definitely looking at this setup, we strongly believe that temporarily bottom has been made around 15,500 mark, and Nifty is well poised for an upside rally towards the level of 18,000 to 18,300 mark, and from there we will try to figure out what could be the further trend. But as of now, the strategy should be buy on dips. Now let us discuss the important supports and resistance in the Nifty for the next week. The first support in the Nifty is placed at 16,447. Second support in the Nifty is placed at 16,345, and third support in the Nifty is placed at 16,133. Whereas on the upside, the first resistance is placed at 16,815. Above that, second resistance is placed at 17,027, and third resistance is placed at 17,220. So this was the most probable thing or most probable trend which we are expecting for the next week on the back of Fed meeting, we feel that any dips should be used as a buying opportunity. Now let us get back to Bank Nifty. On Bank Nifty daily charts, you will see again similar kind of pattern has been formed, a falling channel. I will try to just make this pattern. Now this is what we have seen in Bank Nifty. In Bank Nifty also we had put a horizontal line last week, which was a very strong support, which we have been expecting. Now that was particular over here. So this was the horizontal line which we have been discussing, that this could act as a important support, but fortunately it went down below those levels. It took a support around this particular support line, and again it came back in that particular resistance area. It broke that resistance area and managed to close about those levels. Now again, looking at this falling channel, this particular multiple support zone, we again feel that Bank Nifty has potential to break this channel. Maybe the breakout level would be around maybe 35,600 mark. Maybe next week we might see a breakout, or next 10 trading sessions. So any dips in the Bank Nifty should be used as a buying opportunity. So ideal level to enter in Bank Nifty, if there is any kind of correction, would be around 33, maybe almost around say 33,900 odd marks. If that area is seen in next week on the pullbacks, should be used as a buying opportunity. And we are expecting a breakout from this level. And as we said earlier, that after this breakout and Nifty, we are expecting a huge rally from these levels in next 90 days. So again in Bank Nifty, we are expecting levels of almost around this area, maybe almost 38,000 to 38,500 in next 90 days, 90 trading sessions. So looking at this particular pattern, the view is buy on dips. Any dips should be used as a buying opportunity. Now let us come to the important supports and resistance for the next week in the Bank Nifty. The first support in the Bank Nifty is placed around 34,094 is the first support. Second support is around 33,545, and third support is around 32,948. Whereas on the upside, the first resistance is placed at 34,880. Second resistance is at 35,357, and third resistance is at 35,804. So these are the supports and resistance in the Nifty, in Bank Nifty. So looking at the charts of Nifty and Bank Nifty, the strategy remains to be buy on dips. Now to support this view, I would like to just discuss a chart which is India VIX. So India VIX is a volatility index which we have been tracking since last many years. But at this point of time, I would like to just highlight the important pattern which has been forming at these levels. This is the daily chart of India VIX. It rallied from the levels of 15 till 32. So the market corrected sharply in the last 2 months. After that, India VIX consolidated in a peanut formation. I will show you that particular formation. Now this has seen a breakout on the downside. So now we are expecting India VIX to again retest the levels of this 17 to 15 mark, maybe in next 2 to 3 months. So when the India VIX corrects, it has a reverse impact on the markets. When VIX fall down, markets tend to go up. So most probably what we are seeing, that when India VIX is looking some sort of weakness at these levels, market might make bottom, I mean to say a temporary bottom at these levels, and might rally from this particular consolidation zone or intermediate swing low zone. So looking at this particular India VIX and the charts of Nifty and Bank Nifty, at least we are bullish for next 2 to 3 months. yes, if there are any global geopolitical tensions or escalation of this particular tensions, and if we see any kind of reversal, then we will change our view. But as of now, purely on technical terms, looking at India VIX charts of Nifty and Bank Nifty, we are expecting Nifty to test 18,000 to 18,300 marks in the next 90 trading sessions, and Bank Nifty towards the level of 38,000 to 38,500 in next 90 trading sessions. So again, the strategy would be buy on dips. Yes, it would be a highly volatile day for the next week because of the Fed meeting. But yes, any correction should be used as a buying opportunity. Now let us come to the third segment of our show, which is option analysis. In option analysis, we will try to identify, the smart money, the position building of the smart money in Nifty calls and puts, in Bank Nifty calls and puts. So first of all, we will see what we have observed in Nifty calls. You will see on the screen, in Nifty calls, there has been a rise in the open interest. There has been a significant drop of the option premium of 16,300 and 16,400 calls, the 16,500 calls, and 16,700 calls. The implied volatility is slightly higher. It is not significantly higher, but it is into a slightly higher zone. It is just between 25.85 till 27.30. So as I said, in the last 5 trading sessions, we have seen Nifty rallying sharply. It was a 90-degree move. So some sort of profit booking cannot be ruled out for the next week. Again, as I said, next week on the 15th of March, we are having in the US, we are having a Fed meeting. So they might consider to raise interest rate. So that might put some pressure on the markets. So that is the reason why we feel that the smart money have started writing the out of the money calls. So on the upside, maybe 16,700 to 16,800 could act as a major resistance for the next week. We might see some sort of pullback, and from there we might see buying coming in at the lower levels. So ideal level in the Nifty to enter would be around, say, 16,400 to 16,300. So looking at this particular option analysis on option data. So again, the strategy would be buy on dips, wait for some correction in Nifty. Now let us try to figure out what we have seen in Nifty puts. In Nifty puts, the action was seen in, the open interest build up was seen in 16,200 put, the 16,100 put, the 16,000 put, and 15,900 puts. Here we see that there has been a rise in the open interest, there has been a rise in the option premiums. Implied volatility is also slightly higher. It is just between 30.85 to 33.11. So again, looking at this Nifty put option, we feel that it might slightly drift from these levels. Market might drift from these levels, and then it might get stability at the support zone, and from there again Nifty might start rallying towards the upward trajectory of 16,700 to 17,000 mark in the next couple of weeks. So looking at Nifty puts, we might see some sort of cool off coming in the next week. Nifty might take support at the lower levels, and then again we might see the extension of a rally. So in Nifty also the strategy would be buy on dips. So now let us see what we have observed in Bank Nifty calls. In Bank Nifty calls, you will see on the screen, the action was seen in 35,000 calls, then 35,500 calls, and 36,000 calls. Here you can clearly see there has been a rise in the open interest. There has been a significant drop in the option premium. Implied volatility is also slightly higher. So as I said, looking at the chart pattern also, looking at this option analysis, we might see some sort of exhaustion in Bank Nifty. Initially, we might see some sort of correction coming in Bank Nifty from these levels, maybe 1%, 1.5%. So that is the reason why we might have seen this particular option writing. After the money call option writing, which might put pressure on Bank Nifty also from the current levels. It might drift down to the levels of maybe 33,500, and that could be the support zone. and initially on the upside 35,500 could act as a resistance. So again, for next week, some sort of cool off cannot be ruled out. So use that dip as a buying opportunity in Bank Nifty. Now let us see what we have observed in Bank Nifty puts. In Bank Nifty puts, you will see on the screen the action was seen in 34,000 puts and 33,500 puts and 33,000 puts. Now here there has been the rise in the open interest. The option premiums are rising. The implied volatility is shooting up. It is just between 40.5 to 43.45. So again, as we see that initially we might see Bank Nifty coming into pressure from these levels. Some sort of profit booking cannot be ruled out, and from after that correction, maybe 1.5 to 2% correction, or maybe a 1.5, at least 50% of the recent rally, it might take support, and again we might see extension of rally on the upward trajectory. So again, the strategy would be buy and dips in Bank Nifty also. So overall, looking at the charts of Nifty, Bank Nifty, and option analysis in Bank Nifty and Nifty, we feel the strategy should be buy on dips. Yes, a cool off or a profit booking cannot be ruled out. So use that dips as a buying opportunity from the lower levels. So now let us come to the final segment of our show, which is positional call. I have identified one stock. The name of the stock is BPCL. You will see on the daily charts. The stock has been falling into a downward falling wedge. I will show you on the charts. It is showing some sort of trend reversal from these levels. Now this is the daily chart of BPCL. Let me put an indicator RSI. Now here you can see, I will show you a downward falling wedge pattern. Yet the breakout is yet to happen. But sooner rather than later, we might see a breakout from this particular this wedge. Now here you can see it has been moving into a downward falling wedge. It is on the verge of a breakout after a consolidation. You can clearly see when prices were making lower tops, RSI was making higher tops. It is a classical example of a positive divergence. Currently the stock is quoting around 362. The strategy should be buy on dips. So long-term investors can buy on dips to 354 for an upside target of 412 for the long-term investment. Stock is looking poised for an upside rally from these levels. So the long-term investors can accumulate the stock on dips to 354 for an upside target of 412. The investment horizon would be 10 to 12 months. I mean to say most probably long-term investment. So the strategy should be buy on dips, accumulate the stock, keep it for long-term investment. It can give a decent returns from these levels. So thank you very much friends for watching the show. Let us conclude the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.